All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Um, Market opened, gapped up, has been selling off here. Sitting in the red right now. We've kind of seen the same element of tech outperformance and everything else just kind of lagging and really just kind of stuck in the mud there. Let's go out and take a look at the challenge, and we'll get to it here. We have Netflix and EWZ. Now, I am selling my Netflix, and I will talk about that here, but I am cashing it out. Let's see here if they'll fill me at 25. We'll see. Probably not. They'll probably be stingy here. All right, let's see here. Cancel, replace. See if they'll do it. No, they're probably going to tell me I'm filled. Oh, boy. Well, let's see here. Yeah, looks like I'm not filled. So let's see here. Try that again. All right, 24.20. 24.20 is my exit price there for it. And let's go. Let's go talk about it. All right, we'll fill that in here. 1:24 a.m. and 24:20 and closed. There we go. All right, so that puts the challenge up at about 4,400, and basically 4 trades in. We had two where we got blasted out of the sky with the missile, and then two where we got a nice little run in a short period of time, and Pepsi gave us a little more than a double. Netflix gave us a little bit less than a double here. Now, Netflix profit targets 360.68. Right, 360.68, and right now, as it sits, the stock is trading at 356. So it's about 450 away, and it didn't go and hit its profit target here today so far. Okay. So why am I taking it? Why not roll it? Do all that other stuff? Well, we talked about at the beginning of this challenge that I was going to be a little bit more conservative with some of the profit taking on positions to get us growing. We did that with Pepsi, and I know, yes, Pepsi kept going, but doing the same thing here with Netflix. Just trying to build the account in so that we can stop it with these $1,000 trades. Really want to get into the 2, 3, 5, 7,000 trade area, as soon as possible. And so not taking some of the risks took at the beginning of last challenge, just to try to get that rhythm in play and getting things up to that area. And we talked about that before, so I'm not going to belabor the point here. But bottom line, out of Netflix here, and moving on. I'll look for another opportunity to get in, but we'll kind of let that play out. Here for now. All right. It was a nice little jump yesterday in the close. We kind of, if I pull this up, we kind of got a little fortunate here. Yesterday we got in. What was it? Right here around lunchtime, and it just kind of took off into the close. Opened up red this morning, was down about $3, took off, went up about $10. It's pulling back about $4 here. There's nothing bearish in it or anything like that. In fact, you look at the volumes, it's a very bullish volume spread and everything else. Nice little we got in yesterday afternoon, out this morning. Well, okay, that's not what they're designed for, but I will take it and run here with that. All right, so out of Netflix and back in cash and don't want to be in cash. Do have a position here or a signal that we got on EWZ yesterday, a bullish signal that I decided not to get into because we talked about it yesterday. We talked about it at the beginning of the challenge. I'm going to be very conservative with these ETFs, the EEM, the EWZ, and the EWW, just simply because when it comes down to it, the consolidation risk on signals is significantly higher than with individual stocks because they are ETFs. Doesn't mean they can't make nice runs, and in fact, that's why they are on the watch list, is to be involved in the nice runs if and when they happen. But yesterday's signal wasn't something I was super comfortable getting into just yet. If we come in and we look at the options on it here with EWZ, I am looking still at the Februaries. I'm not going to jump in right here. But these February 47s, even the February 46s, we'll be looking in this area here near the close today. You'll notice those option values have eroded pretty good here today, which, kind of is just simply a product of the EWZ pulling back 1%. And then we'll see some of the time decay for the weekend come on out of them here. And, that will ultimately affect them. So I will look at getting into it here this afternoon, just kind of depending on what everything else is doing, what we see in the market here, what do we see in terms of some of the metrics, to buy a market ETF at the upside when we see the market vibe going the other way. It isn't exactly a comfortable position. And we actually saw yesterday that even with the market up, the market vibe went down. And, we don't often see that. But that's what we saw yesterday. Market vibe at 3, still in a neutral position, but does have the risk factor of going bearish today, which is, something we could see, here, but it is still, neutral as it sits. We had some earnings out of Intel after the bell yesterday, pretty solid earnings. Nice little jump here on Intel, another nice little jump on this stock. We had American Express here this morning. I haven't had a chance to go through the earnings here just yet, but very nice reaction, and on the surface, the numbers look pretty decent. But both of those, pushing on higher here. There still are some concerns when it comes to the coronavirus, and you can kind of see in the things like the FXI, just still isn't able to get much of a bounce. Yesterday it just kind of rallied most of the day off the lows, but still really kind of lagging here. Alibaba, we saw China basically quarantine isn't the right word, but put severe travel restrictions on a 9th city last night. And so we continue to see these Chinese names, roll over, just kind of, lag here. Some of the stocks that are exposed to China, like Caterpillar, lagging here. With what we see. The airlines off of some earnings yesterday got a really nice bounce, but some of the coronavirus concerns starting to come on in here. And we are seeing the airlines pull on back here today. So what? That means more people at home watching Netflix, right? But anyway. And then, you have some of your more travel, destination-centric stocks like Disney starting to, kind of go in these downward trends. While, things that just really aren't affected by it, like Lennar, they keep on going. Apple just keeps on going. They're just some, absolute freight trains right now. Microsoft just keeps on going here with that. All right. So anyway, that's where things sit. It's one where I'll look at EWZ here into the close. We could see a bullish signal come in on Juniper by the close. Here today, they're up off of Intel earnings, but Juniper reports earnings on Monday or Tuesday next week. One of those days, I forget which one. So the options have earnings priced in them, so I wouldn't be able to play it if it were a signal. In terms of the crossovers, we don't have a lot on the board. In fact, Juniper is the only bullish crossover this morning. And the only bearish crossover earlier was Vale. Nike's now on that list, but here's Vale, has a downside 3-7 crossover here. There's one that's had upside, downside as it's just consolidated. The consolidation risk on it's very high. And then here's Nike that has a downside crossover, but coming off of a new high, so not something that'll give us a signal. It's a very interesting short opportunity, though. If you're really itching to get short, you have some negative divergence in some of the momentum oscillators here off of this last move. So I did think you'd have to use yesterday's high as a stop point, if you're getting short, and kind of keep that a little tight. But, you can see one of these little downward waves like what we saw in October, August here for Nike. We could easily see that, come into play there. All right. So anyway, that's that. Challenge back to cash. Out of Netflix, we're up to about 4,400, just south of 4,400 there. And we'll look at potentially buying EWZ here this afternoon, and any other signals that could potentially come into play. Again, thanks for being with us. Have yourselves a fantastic day. We'll talk to you later. Take care.